Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at the WTI chart, the oil chart. Very interesting chart at the moment because we could see some further upside over the coming weeks, maybe months. So we want to prepare you for that. And yeah, if you're interested in receiving daily free Elliott-Wave updates about different markets, different asset classes, then feel free to use the link in the description. Then you can get free access to our Elliott-Wave updates, written updates every single day. So what we do today, we take a look at the oil chart and specifically WTI. So you can see that here, when you register, then you get access to these written updates as well and the different time frames. So what we want to do, we take a look at the WTI weekly chart. I'll click on it, hide the text, and then you can see the structure here. As I said, this is the weekly, so you really get a really good long-term outlook here. And you can see that an A-wave topped before 2009, and that was around $147. Then a very, very long correction unfolded, obviously into 2020, which was this significant low. Nearly zero. Price bottomed there in what we consider a B wave in blue. And the idea is now that we are rallying in wave C to the upside. So that will take a long time. So that's really giving you an outlook for several years. Now, in the preferred scenario, the chart is currently in this uptrend, obviously. Yeah. And you can see here that we likely completed wave 1. So this was the first wave characterized by a 5-wave move to the upside into the trend direction, which is now being corrected. And we can take a look at the 4-hour chart in a minute, and then we can take a look at the detailed wave count of this current correction. Now, in the preferred scenario, which we assign a 70% probability, so it's quite, it's never clear in financial markets, but let's say this is sort of what we are going with at the moment. That's the working count. That's the preferred scenario because it seems more probable. Always be aware that markets are not linear and markets are probabilistic. So our opinion could change, but as long as certain requirements are fulfilled, we can focus on that uptrend. Okay. And the idea is that a third wave rally is now unfolding. So let's take a look at the third wave then. It should take us over the coming months, probably years, above the $147.27 level. So that would contribute to inflation. And you can see very well that as long as this wave 2 low is in, that trend could unfold. Because in Elliott-Wave, this wave 2 is now a key level against which we can focus on higher. Okay, so there is an alternative scenario, which we assign a 30% probability, in which this rally to the upside was just a larger A wave. We are now in a larger B wave, but that would require, first of all, a break below that wave 2 low, and then also a break below the red line at $33.64. So we would assume, especially if that beige wave 2 is broken to the downside, that the price is heading down in green wave B to below $33.64. But again, probability-wise, it's not preferred at the moment. Now, let's take a look at the 4-hour chart. Here you can see the detailed wave count. Quick reminder, weekly, we're currently looking at this as a 1-2 setup, and we're now looking at this. We're zooming into this structure, basically, the patterns. Let's take a look at the 4-hour chart. You can see that the larger degree wave 2 bottomed at $63.64. This was in 2023. And since then, the market rallied in what we consider a first 5-wave advance. It topped at $95 end of last year in blue wave 1. And you can see that we're likely now working on this ABC structure. The idea is that we're now in the C wave in magenta, wave C of 2. And as long as, and that's the condition, as long as this $63.64 level is holding, which we assume is going to hold in our preferred scenario, a third wave rally should begin. And that would be the third wave of the larger third wave. We can go back to the weekly chart. Here you can see that this is the wave 2 that finished, and we had a 1-2, and we're now currently in a smaller degree wave 2 correction. And obviously these swing lows need to hold. Now, going back to the 4-hour chart, this is a clear condition, $63.64. That's the key level against which we can short-term focus on higher prices, but very short-term, as per this scenario here, the short-term chart, the C wave is expected to go down a little bit lower. Okay, so it's not expected to be finished. And then in probably the next few weeks, it's expected that this C wave is finished and then we turn around and we see the price rally above $95 in wave 3, of a larger degree third wave, and that would contribute to this long-term uptrend. Now, the first warning that something is changing would be a break below $63.64. That's the update about oil, WTI. Hopefully that helped you. If you're interested in receiving daily free Elliott-Wave updates about different asset classes, feel free to use the link in the description and register, and then you get access to all of these fantastic updates. Thank you very much. Bye-bye.